for you, but let's get straight to a couple of the big things that happened this week, right? Nigel, this year, or rather in the last 1 year, there have been some big bang debuts that have happened on Dalal Street. But 1 year down the line, it doesn't feel like Big Bang anymore.
Well, you know, Sonia, we know each other for many years, right? And some of us became parents when we were in CNBC-TV18. And the one thing that worries us always is, are the kids all right? Right, when we come to work. So just putting that into the stock market balance, you know, the street is getting a little bit worried. Are the kids all right? You know, that's the worry, because some of these new age companies, new companies that came on, the IPOs, well, they had plenty of promise. They have plenty of concepts as well. And there's plenty of potential as well in there. But the worry is, are these new kids all right? And I'll tell you why. Because in the past quarter, you know, some of them, they have seen a compression in terms of margins. You have EMS companies like Syrma as well as Avalon. The story is very, very good. But the compression in the margins is a bit of an issue. You have IdeaForge as well, which is a very good story, the drone story out there. But there's a compression in margins. And Dreamfolks as well, which basically deals with the service costs that take rate out there. Out there as well, we saw some bit of compression in margins. Even a couple of other names, new companies that did get listed, like Keynes and Ikeo Lighting. Well, on a year-on-year basis, in fact, the margins, they're not much of an issue. The problem is that the quarter 4 of the last fiscal was very good. And from there, there's been a little bit of a come-off in terms of margins. So that's been a bit of an issue. Short point is, for the first quarter, the street has got a little bit nervous with regard to their performance. Now, let's run you through the oversubscription. Some of these companies got oversubscribed big time, barring Avalon. Otherwise, just take a look at the subscription out there. But from the highs, they've corrected quite a bit. You know, some of them, barring a Syrma that's down only around 5%, as well as a Keynes that's down around 7%, some of them have seen a correction of close to around 15 to around 25% odd. Moving to the next point then. Well, at highs, some of them, valuation-wise, were very, very expensive. But since we have seen a bit of a pullback in terms of the stock price, well, they're not cheap, but they have good concepts and good potential as well going ahead. So valuation-wise, they've become a little bit more cheaper in comparison to what they were at the top. Finally, what do you track from here on? Well, the order books. That's very, very important, since bulk of them were EMS companies. So the order book needs to swell up. Then you focus on execution and margin performance from here on. Some of these managements have joined us here on CNBC-TV18, and they said the past quarter is a one-off. Things will improve from here on. And finally, the competitive intensity is likely to pick up in the EMS space. So can they all prosper? Well, that's something that time will tell. For the time being, though, the street got a little bit worried with these new IPOs. Are the kids all right? That seems to be the question. Well, let's get in Andrew